Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Mark says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of beloved pet brand Chewy before it fell 45%, tech company Sea Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone. Happy Wednesday. Welcome back to the Daniela Cambone Show here on Stansberry Research. With me today is Gareth Soloway. You all know him. He's in themoneystocks.com and verifiedinvesting.com. He's on vacation, but he decided to come on the show anyways, hence the reason he's missing his chair, but he still brought his charts. Gareth, always good to see you.
So good to see you, Daniela. Thanks for having me even on vacation.
Yes, I appreciate it. You're just nonstop, always working. Even on this, shorter trading week, no shortage of excitement here. I was excited to have you on so we could just, get a regroup here. Obviously, talk FedNow, which is coming in July, talk the Bitcoin price, talk the gold price, and let's talk about the excitement we've been seeing in the Nasdaq and S&P. I mean, just when everyone kind of had written off the Nasdaq last week, the Nasdaq closed out its best first half of the year since 1983, while the S&P 500 notched its best first half advance since 2019. Obviously, there's a surge in interest in AI, which has lifted investor optimism in stocks here. But the question is, how can this be, Gareth, considering the numerous forecasts we've seen of a significant drop in the U.S. market and the economy?
Yeah, so it has been a remarkable first half, and I still remember coming into the year, and I'm sure you do as well, that the projections from all the analysts said, oh, it's going to be a horrendous first half, but then the second half will be really good. And so it was almost like, if everyone was saying that, it had to be the opposite, and I think that's what we've got here. In terms of numbers, what we look at is if you look at the gains historically on the S&P and the Nasdaq, anything at the level we are at or at up to the 6-month mark or higher, the second half tends to be sideways more so. So up or down about 2% is the general consensus based on the numbers of what they're showing. So I do think the market has kind of predetermined a lot of the upside. I'm much more bearish than up or down 2% into year end based on a lot of factors, inclusive of M2 money supply starting to decline. So I think if you look at the charts, there's this tendency for the stock market to follow M2 money supply. And M2 money supply, the more it expands, the higher the stock market goes. Well, that was following perfectly up until about the last 8 months. M2 has started to decline. The stock market has gone up, creating almost like this jaw. And at some point, those jaws are going to snap closed, and the markets will play catch up. So I think for me, it's saying there was a lot of money on the sidelines. People were waiting. They heard this first half was going to be horrendous. Then it wasn't. Then the AI narrative hit, and everyone is now rushing in. So it's a momentum-driven first half to me.
Yeah, let's talk about this AI momentum. Is it justified for you, Gareth? I mean, let's look at, if we just, zoom in on some of the stocks, NVIDIA, for one, I mean, look at those numbers. What do you do with a stock like NVIDIA here?
Yeah, I mean, this is one of those where, it wouldn't be something I would buy. I happen to be short NVIDIA at these levels because, again, to me, it's a lot of people hoping that they can really make a ton of money very quickly. But historically, when you have these kind of bubbles, and again, you can look back at the dot-coms, you can look back at the marijuana stocks, you can look at the solar stocks back when they first debuted. Even 3D printing was this huge pop in those stocks before they came back to earth. So I do think AI changes our lives over the next 5 to 10 years, but has NVIDIA and these other AI stocks factored in exponential revenue growth before, or multiple years before it comes to fruition? So I think much like the dot-coms, everyone got very, very excited about it because it was going to change the world, and it did, but it just took a little bit longer, and you had to kind of filter out things for a while.
Is there a chart in the AI space that you think is going to be the silent creeper that people aren't looking at yet, but could be an outlier? Have you seen anything?
That is a good question. As of now, I don't have that, but I do think that the AI side is going to be going into things like travel, travel booking, suggestions, like a lot of, like even something like, I could see Google being kind of a sleeper where volatility wise it's not as crazy. It's had quite the run, but I think again it hasn't had the types of runs that we've seen in stocks like NVIDIA, right? So you're not back to all-time highs. So if you got pullbacks on this, like there's a great level on Google around 108. If you pulled back to 108, I think it's actually an intriguing opportunity on something like Google.
Let's pull up Tesla, because I know you have a lot to say about Tesla. They just came out with their auto sales numbers. What do you do with Tesla, Gareth?
So this is a big thing for me because it literally in 2 a.m. I woke up with this epiphany, and
Yes.
it's kind of crazy how this stuff works. But so number one, looking at the auto sales, they beat the numbers by about 5%. The hype was intense, but remember they cut prices by about 20%. So the question is, how much more can they cut their prices to generate these continual beats? I think I also saw today that Toyota had sold over 50,000 vehicles that were electric in the last month in the United States. So there's a lot of competition building. But my kicker, and this is what I think that investors are not paying attention to and mainstream media hasn't even come close to, is that if you look at the sales numbers for Tesla vehicles, over 50% of those vehicles were sold in China. All right, so think about that. Over 5 out of every 10 Teslas are being sold in China. Now, if we look at that number and we say, okay, what's the risk here? What if China says to Elon Musk, hey, if you don't make sure that your algorithms on Twitter perform better and treat news about China in a better light, we are going to say, hey, we are going to shut you down in China. So essentially we have, let's say they do that. Tesla's stock falls by 50% at least, if that were to happen. Now, that means Elon Musk's net worth would decline by about 1/3 or 33%. And so my aspect here is saying, okay, is there a national security threat with them selling so many vehicles in China? Is there a bigger story here that's not being talked about where China could have a large influence on Elon Musk in regards to Twitter and its power as a global speak space, right?
Wow.
So
Wow.
I think that's something, and I'm surprised that the government hasn't brought that up. I mean, if China could literally cut almost $1 trillion company in half by shutting down, and that would affect his net worth by 1/3, I mean, you can't tell me that's not influential to a decision that he may make on an algorithm that he runs through Twitter.
Yeah, I mean, I'm curious, do you like what Elon's been doing with Twitter?
Oh, my goodness. I'm 50-50, right? I mean, the amount of fakes, and I know you have the same problem,
Yeah,
the amount of
yeah.
fakes that are out there and they're just not being blocked it's scary, to be honest. There's got to be about 100 different Gareths now on Twitter, all of them trying to scam everyone else. And it's kind of gotten into like the Wild West to me a little bit. So I personally would like a little bit more control on Twitter. I don't know about you, but I think I'm liking it less and less because of that aspect.
Oh, okay, and then what do you make of this Musk, Zuckerberg? I mean, first they're, want to fight it out, apparently in the Coliseum. And now, Meta about to release a Twitter-like app. Obviously, Musk, putting it down, slamming it down. What do you make of Meta trying to come after Twitter?
Yeah, so I think that makes a lot of sense, right? I mean, they're trying to look for new avenues. One thing I've noticed with myself, I'm spending a lot less time on Facebook more and more. So my Facebook feed is, it almost seems like it's 90% ads at
Boring.
this point. Right.
Yes.
Yeah. I mean, it's literally, I don't even know if I have any friends left at this point because I don't see any of their posts. Right. So to be honest, it's got to be Meta looking and saying, hey, we need to create something. There's an opening here, right? You have the Wild West on Twitter, which a lot of people really like, the total free speech, make up anything and you can post it there. Doesn't matter. There's no fact checking. There's an opening for Meta to do a more positive, more restrictive version that maybe they can make some money off of. So I think that's the avenue. In regards to the fight, I think they should do it, but they should say, "Hey, we will do advertising for this, and it all goes to charity." I literally think they could make for charity over $1 billion so easily. I think it would be a great thing for charity, and I think for charity they would both be shown. It wouldn't even matter who wins or loses. It would just be something that was done for the right reasons to raise money for charity.
You know, you got to give it to those fakes. The creative ways in which they try and spell our name differently. Like I just saw, Cambodia with 4 N's yesterday, Daniela with 7 L's, and I'm like, really?
Yeah.
Anyhow.
And what's so scary about it, for me at least, is that I'll post something on Twitter and then someone will respond in a reply, and then the fake will reply with the
Yes.
same picture, and it'll look like, so unless the
Yeah.
person really looks closely at the name, it looks like I'm replying to them.
Right,
They start
right.
up a conversation, and before you
Yes.
know it, they're asking for
It's
0.1 Bitcoin.
Yes, it's like, will the real Gareth Soloway please stand up? Okay, Gareth, let's talk Bitcoin price. Actually, hold on, I lied. Just to conclude the S&P, because I know you were saying you're sticking to your bearish call. Last time, you were still seeing a 20 to 25% correction end of this year. Are you sticking to that?
I mean, I think at this point to see 20 to 25 in the second half might be a little bit lofty. I do think we do see a large correction, though. I think by end of year, most people will accept that we're heading into a recession. There's been this narrative that somehow the Federal Reserve can create a soft landing, a natural landing with no recession. I think that's people smoking too much of something. If you look historically at almost all the data that we're seeing, and again, we're talking like the twos and the tens, the inversion. I mean, you're talking about, real income numbers that every time they go negative, it has predicted a recession going back to 1950. So all of this data, inclusive of recent numbers like the ISM coming in
Yes.
just a few days ago at the worst level, I think, since May 2020, which was just 2 months after that panic with COVID. I mean, there's even factory orders today came in and missed. There's a lot of signals that underlying everything but the labor market is slowing down quickly. And I think the labor market is a delayed thing that we will see slow down.
Exactly. I have to agree with you on that one. Okay, let's talk Bitcoin. I know 30,000 was a crucial level for you. Now, crypto analytics firm Black-Scholes says Bitcoin, is no longer correlated to U.S. stocks. Do you agree with that statement? Does it matter?
I still think there is a decent correlation. I think slowly Bitcoin is losing that correlation, but I still think, again, if you saw a 10% drop in the Nasdaq, I wouldn't believe that Bitcoin wouldn't at least be dropping as well. So you're right about this 30 to 31,000 level continues to be dead on. And again, what's amazing is we could see here, and let me get rid of this one trend line here.
Please.
This same level goes all the way back to 2021 in the bull market. This low pivot here, these lows here with the mid-cycle dip, all the way over to this area. We hit it in, I think it was April 14th, we tagged it, and look at where we currently are. And we keep on trying to break above this level, but it keeps on failing. So for me, this continues to be the pivot point where it's either the low for the cycle is 100% in at that point, and we're headed probably higher with pullbacks, versus as long as we don't get above this level and stay above it, then I think you could still be looking at downside targets of 20,000 again, 15,700 even, maybe even lower.
Let's talk about the renewed optimism in the space. Obviously, BlackRock and their announcement that they applied for a spot ETF. Look, the likelihood of them getting a green light, how high is it for you, Gareth, at this point?
I think it's going to happen, right? I
Right?
think that
Okay.
that yeah, the SEC, right? If we look at it in the SEC
Right.
has basically labeled these securities. Bitcoin wasn't part of that, and I almost think it's like the SEC throwing a bone to the crypto markets. Like, okay, well, we've crushed you on everything else, your hopes and dreams for everything else. So here's one positive. Now, the big thing is does that mean that Bitcoin can't go back to the lows? And I would dare say that when the futures ETF came out in 2021, that was in October of 2021, and that actually marked the top of the crypto market. So
Yeah.
if we do get a rally higher, I would just be very cautious once it gets released to see if that marks a short-term high.
Gareth, it's because we were on, you hosted a great Twitter space last week. And I bring it up because you had so many great points. And that's why everyone should tune in to Gareth's Twitter spaces. So basically, you were saying it's not necessarily a game changer because everyone thinks, okay, BlackRock ETF, that's going to just blow up the price. But on the space, you were saying not necessarily.
Yeah. Yeah, I think again, people buy the rumors and the excitement, and the crypto market is driven by emotion. 99% of it is emotion driven. And I think that people again get overexcited about these things, and then when they really are out there, you just say, "Okay, well there's gold ETFs, there's this ETFs,
Yeah.
there's all these ETFs, and there's still
Exactly.
the futures ETF, right? I mean, it's not like you can't play the
Right.
BITO or the BITI ETF, which is long short Bitcoin. So again, there's options out there. Yes, it's a little bit better than the futures ETF because you don't have the losing value factor of the flip over of contracts, but it's not really a game changer to me overall.
Well, I mean, what do you make of the very bullish Bitcoin cheerleaders out there who are still saying, okay, this is it, 220,000 by July, by year end? I mean, as a
Yeah.
player in the crypto space, when you hear that, what are you thinking?
So so as a player in the crypto space and as a 20 plus year veteran of investing, to me it tells me that the bear market is probably not over. And I'll tell you why is that when bear markets finally conclude, people are broken. The bulls just they can't even muster bullishness anymore. And anyone who was living through the dot coms or the 2009 financial crisis, you remember this. I mean, when we got to those lows in the financial crisis, at that point people didn't even open up their portfolios. They didn't want to look. They didn't even want to talk about anything anymore. It was like their hopes and dreams had been dashed. And
Yeah.
in crypto that has not happened. And that's a concern to me in terms of telling me that there's still potentially more downside in crypto.
Okay, good segue. Let's talk gold price, which has been, can I say, boring these past few weeks, Gareth?
It has
Can
been
I say that?
boring, but this is the kicker. So when we were hitting a triple top high here, I talked about needing a pullback, and this is the way charts work. So some quick education. So here was your high going back to
Yeah.
2020. This was your double top. Markets and technical charts pull back big time. So there's big pullbacks on double tops, and that's what we saw here, right? So if I put a trend line or an arrow, this was a big pullback. Triple tops are shallow pullbacks before
Okay.
usual breakouts. So notice this retrace. If you connect this high to this secondary high, we broke out, we retraced and held support. My guess is you are now starting the next leg up, and this next leg up should actually be the breakout leg, probably in the next few months, out above the recent, triple top all-time highs on gold.
You know what's interesting, Gareth, and I brought this up in the Twitter space as last week, that when I speak to my bullion dealer friends, I touch base with them almost every week just to get the inside scoop on what they're seeing in the gold market. There was so much buying last week. And I mean, I spoke to, well, at least 4 bullion dealers. I mean, phones ringing off the hook last week. Obviously, this is a quieter week. And that's not yet reflected in the price.
Yeah. Yeah, that
So
makes
the
a lot
demand
of
is
sense
there.
to me.
People are buying gold. There's huge interest if you speak to the bullion dealers, but we're not
Well,
seeing that in the price yet.
and I think and this goes back to the spaces that we discussed before too, is that if you look at what is really a physical, like if FedNow, and I know this is maybe this is a
Yes.
good segue into talking
Yes.
about FedNow, but if FedNow is a backdoor to a CBDC, which it is, right? I mean, CBDC has become an evil word, so they can't use that. So they bring up FedNow, and which will then eventually flip into a CBDC down the line when no one realizes it. But essentially, that's eventually getting rid of paper money. Paper money will probably in the next 10 years no longer exist. Most of us honestly just use credit cards now anyways. But the nice thing about paper money is that it's not tracked. If you want to go spend it somewhere and you don't want the government to know, you can go do that. With FedNow, you can't. And going back to gold, does physical gold and silver become the only physical way to pay for things that can't necessarily be tracked?
Well, that's why I get so frustrated when people say, well, why do you care if FedNow's coming? We already don't have privacy. We've already lost so much privacy. But it's like, to your point exactly, if I want to use cash, it's not tracked, right? Like, I still have some liberty with cash. So I want to thank you for the education you're doing on FedNow, because like we both said, no one's talking about this on mainstream media. Why, Gareth?
I don't.
And two, they say it's coming in July. We don't have an exact date for the launch, but they did come out with this news while everyone was sleeping. 41 banks and 15 service providers, including large firms like JP Morgan, Bank of New York Mellon, Wells Fargo, have completed formal testing and will be ready to provide instant payments after the new service is live. So it's definitely coming in July, and it's going to be a game changer.
It is. And there's a lot of crypto people that be like, oh, we'll just use crypto. No, crypto is more easily tracked. I mean, you can literally track crypto more than anything. So you can't say crypto solves that problem at all. You have to go to something physical. And physical, again, is something that the government's trying to get rid of. And then, like you said, a lot of people will say, oh, well, if you're not doing anything illegal and the government already sees.
Yes.
And it's like, well, it's not illegal now. But like I think I brought this up in the spaces, is that, well, what if all of a sudden one political party gains so much control that just donating to the other party, you get blacklisted, right? Or you get audited, or you get whatever. I mean, there are things that can occur that are 10 times worse. I mean, look at China. Look at some of these other countries out there and how much control the state has over what they do, because everything is tracked. And so, again, something that you may think is innocent today and no big deal, tomorrow, 10 years from now, that could be a no-no, and that's the issue.
Also, over the weekend, how convenient, Gareth, Google updated its privacy policy, saying that the company now reserves the right to scrape just about everything you post online to build its AI tools. So they're scraping everything online. Okay, we get it. Like, Alexa's already listening, but does this move surprise you? Or what does this tell you about just the general direction we're moving in as a society here, Gareth?
Yeah, I mean, we are moving to a more and more scary point in society. And by the way, AI is going to be a great help for a lot of us. It is also going to increase unemployment exponentially, right? So there is going to be downfalls. And also, by the way, as technology advances, it separates the rich and the poor more and more. So it will likely create more strife and more kind of discord in the United States and in the world as well. So again, there's positives and negatives. Yes, productivity is going to go through the roof probably, but there will be downsides to AI as well. So it's a scary future. I think that we need trustworthy people guiding this, and that's the hardest thing to always find, is that I feel like when people gain too much power, it's very corrupting, and that's my concern about it. You need a wide variety of people kind of monitoring.
Gareth, I appreciate you taking time from your vacation to join us. Could you just give us maybe a little nugget? Is there any chart that you think is really interesting that you think could be a buy now?
Oh my goodness.
You weren't prepared for this.
No, I wasn't. But I do have some stuff here. All right. So,
yay!
So take a look at this. Now, you guys know I'm generally bearish on the markets right now. I think we've had this incredible run. But if we look at something like a 3M, which is a defensive name, look at this retrace right here, right down to this level right here, this area here. It's down off of its highs. I don't like buying stocks when they've gone up 3x or 5x or even 50%. I like buying things on sale. It's the same mentality as when I go to the supermarket, right? Well, this on 3M, it's a solid company. It makes money, and it's back to levels not seen since 2007 and 2011. I think as risk goes, this is relatively low risk with decent upside if the markets turn down.
Fantastic. He gave us a gift. Gareth Soloway, I appreciate you. Thank you for coming on.
Thank you so much, Danielle. You have a wonderful rest of your day.
You too. And thank you for watching. Happy Wednesday again. We'll have more great content coming your way. We're back, folks. We're nonstop. We're going to have our summer series coming up as well. So you're going to want to be sure to stay tuned to the Daniela Camboni Show here on Stansberry Research. And in the meantime, don't forget to sign up at danielacamboni.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.